大家好，欢迎来到我们的这次直播。Affirm 今天早上发布了它的财报，所以我们今天的内容是我们一起听一下它电话会议的回放，然后我们再等1分钟，因为我们讲好的是10点半开始。大家如果有问题，可以在留言区先写上，然后我的顺序是这样，我会一起跟大家听一下，然后稍微讲一下重点的关键点，然后后面就是回答问题的时间。OK， 那我们现在就正式开始。首先解释一下昨天这家公司财报的那个乌龙，它是因为人工的错误，然后因为可能我估计是美国因为跨不同的时区，他可能是有些那个负责推特发文的那些人，可能把这个时区搞错了，结果提前几个小时就把财报当中的一部分内容通过他公司的官方的推特的账号发出去了，而且他发出去这部分内容主要包括他的GMV 的，然后还有收入的增长77%好像，所以整体这些内容总体都比较看好，所以发了之后很快股票大涨，然后公司很快意识到这个错误，然后马上被迫1个小时之后全文发布了自己公司的财报，相当于是一个弥补，所以这种提前发财报肯定会吃官司的。原因是什么呢？因为有些人，比如说我如果是个炒短线的，一看到那第一条推文，觉得说，这个股票，现在这个季度明显超过预期，比如收入增长77%，那我马上就去买它的股票，然后结果到了盘中的最后当天结束的时候，然后跌了20%以上，对不对？所以你的就是大起大落，你可能如果你只看这一天的交易，那你肯定会吃亏。所以如果是我是这样的投资者，当然我不是，我说如果有这样的投资者，他就可以有权利去告公司说，你误导了我，你的失误，你提前发布了财报，给的信息又不准确不完全，至少。所以你现在让我亏钱了，所以现在已经有美国有律所，然后在收集这些人的信息，然后跟公司打官司。这种其实很常见的，对公司通常会和解什么，就是不会形成太大的损失。因为美国大家如果了解的话都知道，最发达的是什么？最发达的是律师行业，就是只要有赚钱的机会，律师都会等在那个医院里面看，比如说被那些人撞伤的人，等着像这种股票的操作失误，就是去收集这些，就是class action，就是大规模的收集受害者，然后一起向公司发起诉讼。作为受害者来讲，你只要提供自己信息，到时候收钱就完了。所以这个对公司不会有长期的影响，但跟大家解释一下，它为什么在盘中会发财报，这是非常这是通常是不被允许的，要么你应该是开盘之前，其实多数人是盘后，多数我们的为什么比如说发财报的时候都是我们亚洲时间早上5点6点钟，就是他们就在盘后，美国那个股市结束以后才发，他这个是属于一个重大的乌龙，估计有些人可能要工作可能不保了，所以这是一个小插曲了，这个对。就是让昨天这个看那个股市，它的股价变化很大，但这个对长期当然没有影响。所以我们现在的内容，我会放一下它电话会议的回放，但我会给大家讲一下这个会议里面大家要着重听的几个内容。这里面多数东西跟我之前讲的并不矛盾，但也有一些对我有新的启发。比如我今天听了2遍，这次跟大家一起听会是我的第3遍，所以我会在重点的地方我可能会停一下。讲一下说，这个要怎么理解？比如说他提到有好几点，我觉得对理解这家公司长期的优势和它特点非常重要。第一个，比如说他 CEO 花了很大的篇幅讲他的算法怎么保证坏账率，以及我之前讲过的，他们的坏账率是他们自己的选择，而不是最后的一个结果。然后他还多次提到利率对公司的影响，成本上可能当然是不好，但是在收入上可能反而是好的影响。所以利率这个对其实多数公司没有特别长期非常直接的影响，Affirm也不例外。然后他还提到，我觉得公司之所以到后面 就是财报之后大跌，很大的一个原因是说，大家对它的预期没有设定好。很多人觉得说，亚马逊一旦拿到之后，它就会收入会涨多少。但问题是你如果看它 Shopify， 就是这种大的商户一旦进入之后，它需要比较长的时间来准备，真正看到结果可能要几个季度之后。所以我觉得这是大家其实很多投资者可能没有考虑的。他也提到了，就是他现在的公司，由于我们之前讲过那个 product mix， 就是它不同产品的那个组合现在有很大变化。由于 Shopify 这些公司的商户的加入，那些短线的那些利润比较低的业务增长很快，所以对它的那个 take rate， 就是那个 take rate 中文应该怎么讲？就是那个相当于是租金率就是它的收益率。影响比较大，有一定影响吧，至少。然后而且对它的季节性有影响，比如之前它的增长都是很平缓，一直往上，但现在它会出现明显的，因为它现在业务主要现在变成了电商。电商大家都知道第4季度就是刚刚过去这个季度，因为是销售旺季，是假期，对吧？节日 ，Christmas、新年这些，但接着后面这几个月，1、2、3月会是淡季，所以这个会下降比较多。所以它从今年开始，我估计以后也都会像电商的业务一样，然后有非常明显的季节性。这个我相信也是大家可能之前很多投资人没有考虑到的就感到非常吃惊，说为什么这个季度很好，为什么下个季度给的那个销售指引这么差？所以这是也是大家听的时候要注意的。OK， 还有一点就是说他讲到了就是公司为什么营业就是营业利润比原先设想的还要低，这个也是让我有点吃惊的一点。大家听一下他的管理层的解释。所以我现在开始就放一下整个电话会议的回放，然后比较在重点的地方我会停一下，跟大家讲一下说，这个是要怎么理解。OK， 所以如果大家听了有问题告诉我一下。OK， 我会直接介入他的 CEO 的开始的部分。
Hello, and thank you for joining us on this earnings call. Affirm is just a handful of days away from its 10th anniversary, and this earnings report also marks the first anniversary of our public debut. While the road ahead of us is significantly longer than the one we've traveled so far, the occasion does warrant a moment of reflection on the execution of our strategy during the last 12 months. We feel great about our progress. We remain quite unpivoted and focused on delivering long-term compounding value to all our stakeholders, consumers, merchants, employees, and shareholders. As we introduced ourselves to the public markets a year ago, we talked about several key themes. First and foremost is our mission, which is to deliver honest financial products to improve lives, and to do so while delighting the people we get to serve every day. Because the opportunity embedded in our mission is still so vast and open, consumer growth is very important to Affirm. We've done very well. Indeed, our active consumer growth accelerated, growing by 150% to provide well north of 11 million people with a smarter way to pay. Growth for us is never just about getting the next million consumers. It's also about the impact we can have on the financial well-being of the folks who rely on Affirm. We've also talked about our other all-important constituent, the merchant. Affirm is as much a safe and transparent pay-over-time option for the buyer as it is the ultimate marketing tool for the seller. We help our partners drive meaningful incremental sales without needing to resort to gimmicks or discounting. The number of active merchants on our platform is another key measure for Affirm, and over the last year, we've significantly expanded our reach. There too, we accelerated, with a more than 20x increase from a year ago, and a 64% increase from the rolling 12-month tally we reported just 90 days ago. As a company founded by engineers, we focused early on investing heavily in technology, scalable enough to economically support the smallest of businesses all the way up to the world's largest retailers. We've continued this policy of investment and development in pursuit of technological competitive superiority. The strategy is working and delivering results. In fact, our technology is what has enabled us to work with tech-savvy giants such as Walmart, Shopify, Amazon, and Target. We estimate that this year, Affirm processed 1.6% of all U.S. online transaction volume for the Black Friday Cyber Monday period, another triple-digit increase from last year. simultaneously a momentous number and a signifier of just how early we are in this market. Even a decade in, the ramp up to the holiday shopping rush is an intense yet exhilarating exercise in scalability preparedness. Each year's Black Friday weekend brings by far the greatest number of concurrent transactions we've ever experienced. I'm very proud of our engineering teams for delivering another flawlessly executed, record-breaking Black Friday weekend. And I'm also grateful to our friends at Shopify Engineering who had lent some of their technical expertise to us as we prepped in the days before. It is an oft-repeated adage that product innovation slows down as companies go public. I'm pleased to report that we were able to accelerate our product delivery since the IPO. We've rolled out cashback rewards for participating merchants, delivered the unique adaptive checkout, launched the Affirm Super App and the Affirm Chrome extension, and introduced the beta version of super simple, consumer-friendly crypto savings. You may have noted the announcement of Visa being the launch partner for Debit Plus, which is now in the initial waitlist rollout. Though I will continue to caution you to not yet get crazy forecasting this product's impact on our P&L at scale, I do have fun insight to share. On average, the number of weekly transactions by a Debit Plus consumer, excluding our own employees, is greater than an order of magnitude above that of a regular Affirm user. Of course, these are enthusiastic early adopters, and we fully expect the number to normalize, but it's exciting to see first glimpses of what Affirm as a daily instrument might look like. We remain very excited about the future of this product and expect to talk a lot more about it this year. We had said last year that BNPL is an international phenomenon, and we intend to bring Affirm's unique, no late fees, no gotchas, no regrets approach well beyond our home borders. Over the last 12 months, we've solidified our industry leadership with PayBright by Affirm in Canada and launched in Australia, our first non-North American market. And the growth of our business continues to accelerate. Affirm had more than 168,000 active merchants on the platform as of the end of calendar 2021, largely thanks to our partnerships with online commerce platforms. In aggregate, Affirm is now present on sites that account for more than half of all U.S. e-commerce, and that number continues to march higher every day. In our second quarter, year-over-year GMV growth accelerated to 115% from 84% in the first fiscal quarter. Moving beyond the testing phase of our collaboration with Amazon before the holidays was a significant driver of this growth. However, if you exclude Amazon, our GMV still doubled year over year. We are highly cognizant of the fact that over 80% of commerce is still conducted offline. Our recently announced partnerships with Verifone and Adyen are just two of the numerous investments we're making with our partners to bring honest financial products to consumers at the physical point of sale. We're also expanding the ability to use Affirm in-store with our own products, like Debit Plus. Our focus on using exceptional technology to drive growth and improve efficiency has been a winning strategy for Affirm, and we never stop finding ways to optimize and deliver even more value. This shows up in our results in a number of ways, from new partnerships to long-standing relationships. For example, iterating over the last 3 years, our relationship with Walmart has grown as we proved the value of our products. We expect similarly great things from our other major partnerships with time. As we develop with and learn from each customer, we are excited to bring these learnings and the products they engender to all merchants, big and small. The strength of our network is measured in merchant coverage and repeat consumer engagement, both of which are rising rapidly. We grew total transactions by 218% and transactions per active user by 15% year over year, even as we added a tremendous number of new consumers. Our momentum is strengthening, our strategy is working, and we are extending our lead. We intend to double down on the 3 key things that got us here. 1, deliver unique and delightful financial products that align fully with our mission. 2, continue to be the partner of choice for merchants that care about intelligent growth, scalability, and reliability. And 3, deepen our underwriting advantage. Speaking of underwriting, we manage risk. Though we are an easy-to-understand tool to maximize one's personal capital and the retail marketer's best friend, at our core, Affirm is ultimately a risk-managing business. We facilitate the transaction, settle with the merchant soon thereafter, and bill the buyer over a predetermined period of time. But wait, there's more. When we charge interest, which we don't always do, we don't compound it into principal. Moreover, we don't compound interest after it reaches the amount we communicated to the consumer at purchase time. We refund interest when the buyer prepays. We don't even charge late fees. These are all deliberate choices made in the first few days of our company's life. We meant to align ourselves with our consumers in this manner, avoiding the moral hazard of capitalizing on their mistakes for revenue opportunities. These decisions are as on mission and moral as they are self-serving. These policies are an important part of why our consumer satisfaction is so high, and we only want it to go up. With these self-imposed guardrails, exceptional underwriting and risk management frameworks are a requirement. That's why we underwrite every transaction before making a credit decision, unlike some of our competitors in the BNPL space who readily admit they do no underwriting at all. It is also important to understand that unlike many players in our industry, we do not treat delinquencies or defaults as an outcome of our business decisions. Indeed, we choose acceptable delinquency rates as an input into our decision-making, based on the pricing our products command with our customers, our view of the macroeconomic conditions, and the demand for our loan volume in the capital markets. This distinction may seem subtle, but I think it really helps understand our approach to risk. We spent the last decade building what we believe to be one of the best-in-class credit underwriting ecosystems. Data, tools, processes, and teams that deliver underwriting models with some of the very best results in the industry. Today, I'll pull the curtain back a little, and while I will keep it very high level, in part to avoid giving out trade secrets, feel free to tune out for a few minutes while I nerd out. Affirm's underwriting advantage begins before any of our models are interrogated for a decision with our product design. Because Affirm is predominantly offered at the point of sale, we have a natural opportunity to explain our value and transparent approach to the consumer. As a result, we avoid much of the adverse selection that often comes with traditional lending. Coupled with SKU level data we receive from our partners, our models tend to split the risk far better than those used in traditional consumer loans. Another fundamental structural advantage Affirm has is its total separability of transactions. Unlike providers of lines of credit, we underwrite transactions individually, modeling a consumer's ability to pay us back as well as their propensity to do so. This notion of separability is also recursive, a consequence of our product. Because repayment schedules are highly predictable, our models operate at an individual installment level. This separability is a powerful tool for modeling as well as managing risk. We're able to deliver a reliable forward-looking picture of both consumers and our own cash flow. Our proprietary network of directly integrated merchants, as well as other sources of non-traditional underwriting data, offers us a significant raw data advantage in feature engineering. We maintain a library of over 500 features that we select from as we create new models or update existing ones, while continuously looking for and eliminating any potential for disparate impact in our decisioning, both at individual variable and model levels. We train our models using academically well-understood gradient boosting technique, with significant proprietary modifications we've invented that help us improve results. Because from the very beginning, we focused equally on consumer and merchant information, we ended up with a large number of models that are specific to our product and merchants who use them. Moreover, as we launch new products with new and existing partners, we acquire new types of data that we incorporate into the models and over time give incremental weight to. Underwriting models decay over time as macroeconomic conditions and consumer behaviors change. Even the very best performing ones can lose a few percentage points of their area under the curve every few months. Over the years, we've built special purpose models that track model decay, the machine learning equivalent of a canary in a coal mine. Our proprietary software and processes allow us to rapidly retrain, retest, and redeploy models where the performance has deteriorated in a matter of days. To illustrate this, let's take a side-by-side look at ITAX, one of our longest-serving proprietary models, versus a traditional credit scoring system like FICO. Using ITAX, reducing originations by 10% would eliminate a third of all delinquencies in dollars, while using the traditional credit scoring system would only reduce delinquencies by a mere 13%. Let's take it a step further. If we were to reduce originations by 30% using ITAX, we would remove 70% of all delinquencies, while the traditional score would only catch 36. So needless to say, this model slopes a lot better than a traditional industry standard. These achievements may sound quite abstract, but they have a very real impact. With our superior underwriting capabilities, Affirm can approve many more college students buying tickets to see family after months of pandemic isolation and young parents picking up their first stroller. And because Affirm's average loan duration at origination by design is very short, at just 5.2 months, the exceptional precision and recall of our credit models give us great confidence that our portfolio, both retained and sold, will continue to perform well in the future. Any use of advanced technology has both advantages and risks associated with it. As we push our model performance further in pursuit of expanding our offerings, we work just as diligently on ensuring that our models are both compliant with all applicable laws and rules, and that our model decisions are both reasonable and are understandable by consumers. We regularly audit our models to avoid correlation with prohibited bases and have them audited externally. We also invest heavily in explainability of model outcomes so that both consumers and regulators can understand our decisions quite easily. None of this, of course, would exist without the extraordinary team of people that make it all possible. I am truly fortunate to have been able to start this company with a group of brilliant minds who in turn attracted more and more talented folks to join our mission and bring their mathematical and other talents to bear. It is this embarrassment of riches among my teammates that makes me so optimistic about the next decade of Affirm. Large as some of these numbers might be, Affirm still accounts for around 1% of US e-commerce, and both consumers and merchants are genuinely excited to get more value from Affirm. And we are excited to deliver it. As usual, I want to thank my team for all their amazing work, and even during some of pretty volatile moments for our stock price, for staying truly focused on a long-term value creation for all our stakeholders and on our mission. Now on to Michael for the numbers.
这一部分我觉得很重要，为什么大家一定要听？可能有时候要多听一遍。就是我们其实之前刚讲过它的年报，我说过来，第一部分是讲它的整个生意模式，然后产品为什么在市场受欢迎，它的算法的优势。其实刚才 Max 讲的这些都是相当于是年报内容的一个算是总结，然后还举了例子，它跟它的这个算法跟 FICO Score 的相对的比较，所以我觉得这是很核心的内容。理解这家公司的话。
Thanks, Max, and good afternoon, everyone. Our second quarter results demonstrate a massive step change in our network scale, driven by our partnership with the largest enterprises and our technology advantage. Growth accelerated on both sides of our network, as active consumers more than doubled, while active merchants increased more than 20 times. Frequency increased alongside that explosive user growth. Total transactions grew 218%, the fastest rate since our Series D private funding round. We grew GMV 115% and revenue by 77%. In November, we completed the rollout of our initial offering at Amazon in the United States. And even excluding Amazon's contribution, we significantly exceeded our outlook for both GMV and revenue. Unit economics were also strong. Revenue less transaction costs grew faster than revenue at 93% from the prior year. And even as we accelerated network growth, we continued to operate with efficiency, reducing the equity capital we used to fund our loans by 17% versus last year. With the accelerating growth of our business and the early traction with our enterprise partners, we are raising our outlook for fiscal year 22, which I'll share more about in a moment. Before I do that, let's walk through the second quarter results. Unless stated otherwise, all comparisons refer to our second fiscal quarter of 2022 versus Q2 of fiscal 21. We had another great quarter for consumer growth. Active consumers increased 150% to 11.2 million, and increased 2.5 million sequentially from fiscal Q1. Despite adding users at this aggressive pace, we grew transactions per active consumer by 15% year to year, and more than tripled the number of transactions. More merchants, platforms, and brands are leveraging the power of Affirm to grow their businesses. In the second quarter, active merchants grew to more than 168,000 from just 8,000 last year, thanks in large part to the scaling of our partnership with Shopify. On a sequential basis, active merchants, which we calculate over a trailing 12-month time frame, grew 64% from the September ending quarter. Turning to GMV. We grew GMV to $4.5 billion in our second quarter, a $2.4 billion increase from last year. The 115% increase includes the volume from our partnership with Amazon. We completed the launch of our interest-bearing program at Amazon in November, ahead of Black Friday, and while the program is still in its infancy, with a long roadmap of optimizations to work on, we've seen rapid consumer adoption. We look forward to years of growth from this collaboration. We have strong momentum across our business. Excluding Amazon, GMV doubled, with growth across all products and verticals. I would also note that our business with Peloton, our second largest merchant partner by GMV in the quarter, was up against an unusually strong prior year comp following the launch of a new product slate and boosted by COVID tailwinds. As a testament to the increasing depth and breadth of our network, no single merchant accounted for more than 10% of Q2 GMV. 1 year ago, we discussed how we would expand into higher frequency purchase areas and diversify our merchant partnerships. A year later, I'm really proud of how our team has delivered on these objectives for our shareholders. Shifting to industry verticals, we had a phenomenal holiday season. We more than doubled our volume for Black Friday, Cyber Monday, and we believe we took significant market share from both traditional incumbents and BNPL pure plays. As Max shared, we estimate that Affirm facilitated 1.6% of total online transaction volume for the Black Friday, Cyber Monday period in the US, and we saw particular strength in key holiday categories in Q2. Travel and ticketing increased up 314% from last year, topping last quarter's high mark, even despite the emergence of the Omicron variant. General merchandise grew 368% above last year, driven by our deepening partnership with the industry's leading retailers and the launch of our offering at Amazon in the US. Consumer electronics, which grew 209% year to year, was another great story, driven by strong demand for TVs, laptops, and gaming consoles. Our results this holiday season highlight our ability to take share and grow in any environment, and importantly, why we're so different from the competition. Outside the US, we had another outstanding quarter. Our Canadian business more than tripled in size, thanks to existing and new partnerships, including Apple, which launched in the fall to brisk consumer demand. In the second quarter, we also entered the Australian market with Peloton and look forward to growing our business with them there. This quarter, our interest-bearing program, which includes our initial offering at Amazon, grew significantly, up 124% year-on-year to $1.4 billion. Before I jump into the financials, let me walk through the mechanics of this offering to illustrate the impact on the income statement. On the revenue side, we monetize these loans by either holding them to maturity or selling them to third parties. When we hold the loans, we primarily earn interest income, which we recognize over the duration of the loan. Hence, this quarter's revenue reflects just a portion of the total yield we will ultimately see from the GMV we generated in Q2. We will recognize the balance over the subsequent quarters. As an illustrative data point, we sold 59% of the interest-bearing loans generated in the US this quarter and retained the remainder. On the expense side, we provision for credit losses up front. For loans we hold, this means that the margin profile is back-end weighted. Our partnerships with key enterprise merchants are unlocking more opportunities for our business every day, and we are investing today to realize the full long-term potential. While we are just in the beginning stages in scaling these partnerships, we are already seeing them drive network expansion, and we expect to deliver strong unit economics when they reach scale. Now, turning to the financials. The strong GMV growth also drove strong revenue growth. Net revenue grew 77% to $361 million, well above our outlook. Total network revenue grew 39%, while interest income increased 87%, and gain on loan sale rose fourfold. Revenue as a percentage of GMV contracted 170 basis points to 8%, driven by product mix. Split pay grew over 4 times year-on-year and accounted for more than 20% of GMV in the second quarter from just 11% last year. In our earnings supplement posted to our investor relations website, you will see that merchant revenue take rates have remained relatively constant for each of our offerings.
就是这张是很重要的，了解它的 business， 这是我之前讲的它的 product mix， 它各个产品的比重。就是说，比如说我们看它这个叫 split pay，split pay 就是说你如果在 Shopify， 很多它本身金额不大，然后你是buy now pay later， 就先买后付，它就是把它作为4次付款。这是很简单的，比如你买的时候只付1/4，然后后面隔几个星期再付剩下的3次就结束。所以这部分呢，它的利润比较低，然后所以因为它本身没有利息，从商户那里，比如说它是 Shopify 或者将来亚马逊如果也有这些，它在这些大的商户平台上，它能拿到的利润又比较低，所以它的 take rate 比较低。所以这部分你看，从1季度到2季度，也就是我们刚才过去那个季度，它有很大的增长。但同样的，从它另外一个原先的它主要的那个 core IB 就是 interest bearing， 就是带利息的，它的主要的原先那些主要产品，比如说派乐糖这些，就是它利润率原先比较高的这些比重相应下降比较大，所以这个一增一减，它就引起了它整个对它 take rate 可能应该翻译成毛利率就是它从整个的销售额中能够拿到那个比重，然后在过去这几个季度就有下降所以这是理解它的 business 一个重要的地方，就是将来这部分只会越来越增加，因为它的至少在未来几年，这些电商的平台增长肯定会快于它其他原先的一些，比如说 Peloton 那些商户，对不对？所以这些比较低利润率的 take rate 比较低的这部分的这个增长肯定会更快，所以它的总体的利润率是会受影响的。
On the expense side, we continue to grow revenue faster than transaction costs, delivering real leverage. Total transaction costs of $177 million grew 63% year over year compared to revenue growth of 77%. And excluding provision for credit losses, transaction costs as a percentage of GMV declined 190 basis points to 2.8%. Given the mix shift from longer duration 0% APR loans, loss on loan purchase commitments declined 4%. While improvements in our capital program helped limit the growth of funding costs to 47%. Provision for credit losses grew from $13 million 1 year ago to $53 million, as the year ago figure included a $39 million release of excess COVID-related loan allowance, while this year's figure reflects the intentional normalization of credit that we've discussed over the past several quarters. Over the first half of the fiscal year, we have managed delinquencies of 30 days or more to remain below the same periods of fiscal 2019 and 2020, even as we have expanded the credit box to a more normalized level compared to the early days of the pandemic. Our strong top-line growth and leverage we achieved on transaction costs drove a 93% increase in revenue less transaction costs to $184 million, above our outlook range, or 4.1% of GMV. Looking at OpEx beyond transaction costs, we continue to invest in building our team and elevating our brand. We doubled headcount to more than 2,000 Affirmers and increased marketing around the holidays. Our teams have delivered a torrent of exciting new offerings, while our brand campaign drove greater awareness across all age cohorts and helped us reach the highest aided awareness among BNPL providers at 45%. Growing our team resulted in higher personnel costs and stock-based compensation. In Q2, total operating expenses, exclusive of transaction costs, grew $258 million, of which $158 million was related to D&A, stock-based compensation, warrant expense, and one-time expenses related to our IPO and acquisitions. Excluding these items, non-transactional operating expenses grew 109%. On a GAAP basis, operating loss was $196 million, which compares to a loss of $27 million last year. Adjusted operating loss was $8 million in the quarter compared to a $3 million of income in the prior year. Now turning to our balance sheet. We fortified our cash position and delivered accelerating GMV growth while continuing to manage our capital with discipline and efficiency. In November, we issued $1.7 billion in zero-coupon senior convertible notes with a 5-year maturity, which has significantly increased the capital we have to invest in growth at an extremely attractive long-term borrowing cost while minimizing dilution. Our effective capital markets program and disciplined approach helped to reduce equity capital used to fund our business from $277 million last year to $230 million, even as loans on the balance sheet grew by more than $500 million. As a percentage of total platform portfolio, equity capital required declined to 3.6% from 7.5% last year. Total platform portfolio grew 72% from $3.7 billion to $6.3 billion at the end of Q2, and we increased our overall funding capacity in line from $4.7 billion last year to $8.8 billion. Over the past year, we brought on $1.9 billion in new loan buyer commitments from both new and existing capital partners. Our balances held by third-party loan buyers from our forward flow program grew 129% to $3.7 billion, while our securitization program grew 83%. Our warehouse balances declined 24% as we continue to focus on more efficient funding vehicles. Before I move to our outlook, I want to touch on an important topic that has been top of mind for investors: interest rates. While potential interest rate hikes have dominated headlines, we remain confident in our ability to continue to grow rapidly while delivering strong economics as rates rise. Our financial outlook already reflects the roughly 180 basis point increase embedded in the 3-month LIBOR forward curve, and our current long-term model, which calls for revenue less transaction costs of 3 to 4%, also assumes rate normalization. We have significant advantages to help us mitigate the impact of rising rates, including broad and diverse funding partnerships that allow us to shift funding to less rate-sensitive counterparties, sophisticated underwriting and risk management infrastructure that allows us to manage unit economics with changes to our cost environment, and high turnover, short-term assets that make our portfolio inherently nimble and able to react quickly to changing market conditions. At a constant product and funding mix, we estimate that a 100 basis point increase beyond the increase implied by the current yield curve would only result in a 10 to 20 basis point impact to revenue less transaction costs as a percentage of GMV for the remainder of fiscal year 22. Looking out to fiscal 23, we believe that a further 100 basis point rate increase, again, beyond current expectations, would only result in approximately 20 basis point impact to revenue less transaction costs as a percentage of GMV based upon our current funding and GMV mix. And that is before we apply any of the numerous offsets we have, including consumer and merchant pricing, funding strategies, and credit optimizations. Looking beyond fiscal year 23, at our current funding and product mix, we estimate the impact to revenue less transaction costs as a percentage of GMV to be approximately 40 basis points for every 100 basis points of rate movement beyond the current forward curve. And again, that is before applying any cost, credit, and revenue optimizations. Now, turning to
所以这个 CFO 是在讲那个利率，如果是因为大家知道利率后面会缓慢的会有上升，未来的几个季度，所以他讲说这些利率的上升，因为对所有的公司，尤其他这样的公司，因为它需要资本市场不断的融资来支持这些贷款的增加，所以对他们的影响其实是比较小的，因为它周转比较快。然后还有一个我就说它就是第一个影响比较小，就是它增长1%，对它的整个成本自增长，比如1/1000或者2/1000。第二个，他还讲说，这是他还有一些其他的手段可以把这些利率的影响抵消，比如说通过价格提高或通过就是在华尔街拿到更灵活的一些资本的这些，所以就说利率本身对成本来讲肯定是一个不好的消息，所以这是他讲说，就是这个不好的消息其实本身。第一个，他已经完全放在他的预算里面；第二个，这个其实本身的不严重。然后后面还有一部分，他的 CEO 会解释，这个利率如果上升，在一个上升利率的环境下，它的产品可能对销售来讲，反而是好消息。所以这个利率对他来讲是个双刃剑，有好有坏。对它的增长可能是好的，但对成本会有一定的压力。所以我觉得这是我一直的观点，一个好的公司如果生意模式没有问题，管理层靠谱的话，不要太在意利率的高低，尤其现在即便利率增加，我们未来的几年仍然是总体处于低利率的水平，这是非常清楚的。
Our business has never been stronger, and as we look through the remainder of our fiscal year, we are raising our financial outlook to reflect the robust second quarter results, accelerating momentum in the business, and we are now including Amazon's expected contribution to the outlook. For fiscal year 22, we now expect GMV to be between $14.58 and $14.78 billion, representing a 76 to 78% increase from fiscal year 21. Given the strong traction we're seeing with Shopify, we now expect our split pay offering to comprise 15 to 20% of total GMV for the fiscal year. We expect revenue of $1.29 to $1.31 billion, representing year-over-year growth of 48 to 50%. We expect transaction costs of $705 to $715 million, resulting in revenue less transaction costs of $585 to $595 million. This reflects the continued mix shift we are seeing in the business. We expect an adjusted operating loss as a percentage of revenue of 12 to 14% as we continue to invest in the long-term growth of our business, and weighted average shares of approximately 285 million.
这是 就是让市场比较惊讶的一张 slide， 就是很多人觉得一方面他觉得可能是收入，尤其是他马上就讲说马上要进入的第三季度，他的第三季度其实就是下一个季度，就是其实是就是这个季度是对多数公司按照日历来讲，就其实就第一季度，今年第一季度，它的增长就是显得不太快，就相比刚刚发生的这个季度呢有大幅的下滑，这就大家没有想到，他的公司现在业务现在主要转向电商，所以它这个季节性变得很强，这是第一个所以这个其实可以理解，就是这个可能让一些人很惊讶，但是听了之后就这个还是有道理。但是让我比较惊讶的反而是后面一点，就是它这个调整后的利润率。我之前在讲年报的时候讲过，我说他的公司如果看整体的就是 unit economics， 单位经济效益其实还 OK， 当然不像 Upstart， 就是会计盈利，但它离盈利其实不太远。你如果把那个股票的费用减掉之后，其实已经非常接近盈利。但现在他给的指引管理层给的指引，整个从今年全年看下来，就是包括已经发生的2个季度，还有后面2个季度，这是4个季度算财年，2022年对他来讲是这样。他的就是利润率调整后的利润率比这个季度还要差，就是还有负的14%到负的12%，就这比我预想中要差。后来我又看了一下他的详细的信息，我一会儿会讲一下这个内容。所以这是对华尔街可能是不好的消息，就是说这个指引比原先想的要差，而且的亏损比原先想的要多。
Consistent with Max's remarks, our outlook does not assume a material impact from the rollout of Debit Plus. We also expect a very strong fiscal third quarter with GMV of $3.61 to $3.71 billion, total revenue of $325 to $335 million, transaction costs of $187 to $192 million, and revenue less transaction costs of $138 to $143 million. Adjusted operating loss as a percentage of revenue of 19 to 21%, and weighted average shares outstanding of 290 million. In closing, we just posted an incredible quarter of growth, and our team is seizing this momentum to continue to deliver on our mission. I'd like to add my thanks to the great work of all Affirmers this quarter. Max and I will now open the line for questions.
Thank you. Ladies and gentlemen, at this time, we will be conducting a question and answer session. If you'd like to ask a question, you may press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star key. One moment while we poll for questions.
Before we open it up for Q&A, I want to briefly address the earlier than customary issuance of our earnings press release today. Due to human error, a small portion of our Q2 results were inadvertently tweeted from Affirm's official Twitter account earlier today. And because of that, we felt it was appropriate to release our full financial results as promptly as possible thereafter, rather than waiting until after the market closed. With that, I'll turn it over to Doug to begin the Q&A session.
Thank you. Our first question comes from the line of James Fawcett with Morgan Stanley. Please proceed with your question.
Great. Thank you very much. I guess my first question is, obviously, the December quarter was massive for you guys, but the outlook doesn't seem as comparatively strong, especially the March quarter, and particularly if we're now incorporating more split pay from Shopify and Amazon, et cetera. Can you walk us through kind of that dynamic, especially on a sequential basis? I mean, is this seasonality, more than expected drag from Peloton, impact of revenue timing on Amazon and others? Just kind of help us understand the sequential evolution of the business.
Yeah, I'll grab that one. And I think to start off, we're very happy with the pace of scaling in the network. The Q4 results, as you said, were pretty spectacular. Sorry, calendar Q4 results were pretty spectacular, and it was indeed a special quarter. We are reiterating our guidance and taking it up, so our outlook continues to improve for the balance of the fiscal year, and we're still well in excess of the growth phase. We're in the hyper growth phase for the stock. And so we feel really good about the scaling that we're doing. Yes, there are impacts of seasonality. Calendar Q4 tends to be heavier with holiday shopping. And as I shared in my remarks, we had a really strong holiday season. So there's a little bit of sequential impact there. And yes, the growth of interest bearing will tend to create some back-endedness to both the revenue and margin profile of those originations. But again, I think we're very happy with the pace at which we're scaling. And we're certainly not focused on or concerned with the next quarter. We're really looking about where this network will be over the next decade.
And then, Michael, this is probably also for you, but and I think both of you and Max highlighted that there's been a lot of questions around interest rates, but a lot of the other questions have to do with delinquencies, et cetera, and as you said, is that you're kind of close to your target. But we noticed that the most recent update, at least in the supplemental, indicated that the percentage of 30-day delinquencies started to turn down and away from kind of your 2% target in recent weeks. Is that purely because of the nature of the incremental mix from the likes of Amazon, or better consumer repayments, or are you tightening the credit standards? And how should we expect that to evolve in coming quarters?
Yeah, very good question. If you look at the chart that we have in the supplement, you can see the seasonality curve of delinquencies. There's actually quite a bit of seasonality tied to both the shopping seasons and the repayment schedules that happen. And we're back to a more normalized seasonality curve with respect to what you see in delinquencies. And to reiterate the point, we're very happy with the credit outcomes we're driving right now. We take a very intentional approach here, and we have intentionally been loosening the credit box over the past year. We're still below 19 and 20 numbers, fiscal 19 and 20, and feel really good about the level of delinquency in light of the total unit economics that we're driving. And the only other thing I'd add is that we really do manage to a total portfolio number here. There's a bit of a misunderstanding, we think, out there with folks looking at not the portfolio delinquencies, but looking at one securitization vehicle or one particular slice of our business. We are very thoughtful about portfolio construction that goes into any one of our funding vehicles, and each one has a unique profile based upon market demand and our needs. For example, the split pay content may change. We may pledge loans that have some starting delinquency, et cetera. And so no one securitization data set can really represent the portfolio, and would really encourage everybody to look at our investor supplement to see a real view of portfolio-wide DQs.
这个非常重要。这个其实为什么我在会员区我们连续有好几个视频讲这个，就是你不可以拿它，就是 Upstart 也好 Affirm 也好，不可以拿它的这个证券的评级报告里面单个的 ABS， 就单个的一笔的证券的资本化的那个贷款的然后看它的业绩说，哎，从这批来看它的坏账率比原先增加，也就意味着这家公司现在有问题，这个不可以的。OK，CFO 讲的也是同样的问题，就是说，因为它的每次的贷款就是那个批次质量不同 ，OK， 所以它的算法不同，质量不同，因为它每次质量不同的产品那个贷款，它给出去的价格也就不一样 ，OK， 因为它最后算的是中间的差价，是它的利润 ，OK， 比如贷款整个的贷款的产品比较差的情况下，它的收的价格利率就比较高，所以最后的利润还是没有问题。所以好多人如果只看后面说，哎，你看你这笔贷款按照评级报告告诉我说坏账率比原先的贷款另外一批要高，意味着你现在公司有问题，不是这样的 OK， 所以这是一个非常在华尔街非常普遍的误解，所以 CFO 刚才讲的就这个意思 OK， 我们之前视频的也是说的同一个意思。
That's great, Michael. Thank you very much.
Our next question comes from the line of Timothy Chiodo with Credit Suisse. Please proceed with your question.
Great, thanks for taking the question. Michael, you touched on this a little bit in your prepared remarks in terms of slide 13, which has the merchant fee rates. And you're right, overall, most of the lines are pretty stable. I wanted to see if we could just touch on a few of them that are moving around a little bit. Specifically, the dark blue, which is the split pay, seems to be ticking up a little bit in terms of the take rate. I was thinking maybe that could be related to Shopify. Also, the purple line, which is the core IB, just ticking down a hair, maybe related to Amazon? And then if you could help us maybe elaborate on either of those, and also the green, the non-integrated virtual cart, I'd really appreciate that context.
Yeah, the last we have the least amount of control over. That really is a function of the network interchange that we earn. And I think you nailed it. The line that you see on split pay merchant fee rates up versus Q1. We were promotional with Shopify in particular in Q1, but really up even year on year back to the fiscal Q2 in 21. So we feel really good about our resiliency with respect to the most competitive space, which is the split pay product set. The IB line that you point out is a function of the growth that we have in our largest enterprises, where we would earn less there than we would everywhere else. And part of the reason we're so confident in how we're growing is those two things mix in our favor, where you've got a lot of growth in the split pay offering with really high merchant fees, and you have a lot of user growth that comes along with that, combined with these enterprise scale offerings that will drive tremendous processing volume, as well as, in the long run, we think really strong economics. So feel really good about the mix. I really want investors to understand that when you have this sort of major shifts in the mix in the portfolio, it will shake out differently in the income statement.
Thank you. Point well taken there on the various mix dynamics. Appreciate it. Quick follow-up is on processing costs. So fully appreciate that the Shopify revenue share will hit in that line item, which could cause a little bit of upward pressure on that specific expense line. But a potential offset could be reduced card mix within their loan repayment. Is there any potential for you to work with someone like a Plaid or a Finicity to help increase the mix of direct bank account repayment?
Yes, there is the potential. I was just starting to fall asleep because you guys are asking Michael's excellent questions, and he's doing a great job answering them. Sorry. The long and short of it is, it's exactly right. The way I think, and this goes back many years now, the way we look at our transactional economics is across multiple dimensions. One is, of course, lifetime value of the consumer, kind of managing credit side of it. But if you, in the ROA basis, you have to look at the charge-offs that you incur, and once Michael touched this really well, and it's kind of all over my script, but basically we manage that to a number. We decide what that's going to be, and we drive that to a basis point that we like per product, per merchant, etc. After you're done with that, you look at your other costs, and servicing is the one where we're always really hesitant to mess too much because you want the consumer experience to be amazing. And obviously over time we'll optimize that to a perfect number, but the sort of the high touch white glove service that we've created is really, really valuable to us. We're completely ruthless on the rest of it. The repayment cost is something that screams 80 basis points away, and you're totally right. There's lots and lots of opportunity. The repayment devices or vehicles are not all created equal. There's some really interesting innovation happening even sort of beyond ACH, which is currently kind of the most popular / cheapest one. And so we will absolutely do lots of things there. It is more important, and in this whole story of this quarter, we're reporting and going forward, but we're still taking enormous amounts of white space. The growth of the network is what we are grading ourselves on right now. We are paying attention to costs, and at scale, these are real dollars, and we'll invest in reduction of these costs as well. And we guessed pretty well where opportunities are.
Excellent, thank you.
这个问题不好理解，然后他回答的就是，如果你对支付的行业没有比较好的理解，可能也听得有点云山雾罩。OK， 我大概稍微解释一下，就这是为什么说，比如说很多人对像 Square、Affirm 这类公司长期看好的一个重要原因，就是说我们之前讲可能不知道多少人看过我讲的 Visa 那一集，就那个 Visa 那一集就讲过大体的支付行业的整体的蓝图。比如说你如果做任何的电商支付，它支付，比如说它这主要的成本当中，很大一部分的成本是给到了你要支付，就是那个交易发生的在哪个网络上。比如说你要用 Visa、Master 它信用卡网络，或者它借记卡网络，你本身要给它这些付费，一个 Visa、Master 要收费，还有其他人付费。比如说你如果在 Shopify，它用 Shopify， Shopee Pay，right？ 他就是在这个网络之上 ，Shopify 还要再收一部分钱。所以他刚才这个分析师的问题比较有深度。他说你有没有想过将来在这个支付方面能做些文章，把你的那个就是 transaction cost， 就是交易成本大幅下降。所以刚才的 Max 就在那个笑，就这个原因，就是说他脑子里他当然是想的10年以后、20年以后，他肯定会有很多可以做。其实做的无非就是说，不采用，就是我所有跟我的用户、跟商户的这个支付的买卖的交易，所有的流程不走已有的信用卡或者借记卡的网络，而是走，比如说他提到了 ACH 就是美国的，就是银行之间的那个老的那个交易系统，那个是比较便宜，因为它不像信用卡一样那么普遍或者那么高效，所以现在很多那种小的科技公司反而转去用原来的 ACH， 用那种那个网络来实现支付，所以那个就便宜很多。然后另外他可能还想到别的一些支付方法，将来不排除用blockchain 的这些别的手段，所以就是他为什么笑，就说这最终肯定是他要考虑的，但只是现在他还没有那么大的规模可以直接跟这些大的 Visa、Master 叫板，然后把这些很多东西挪过去，可以，但这是他将来未来的，就是如果他的利润要提升的话，就是要把交易成本降下来，这是其中最重要的一块，就是这个支付网络方面的创新，就是怎么避开 Visa 和 Master 现有的这个交易网络，建立自己新的网络。
Michael and Max.
Our next question comes from the line of Ramsey El-Azail with Barclays. Please proceed with your question.
Hi, guys. Thank you so much for taking my question this evening. I wanted to ask about the spread between volumes and revenue less transaction costs, and just kind of get your expectations about where those kind of yields should sort of trend and shake out over the next few quarters. Where do they exit the year? What should we think about in terms of next year modeling them out? If you could comment on that, it'd be very helpful.
Yeah, we're not ready to give guidance for 23, so avoid that one. But I think the guide that you see in the results we just posted, we talk a lot about the long-term economics of the business being somewhere between 3 and 4% on a revenue less transaction cost basis, and we're on the higher end of that last quarter and inside the guidance for the back half of the year as well. While I think it is changing quite quickly with respect to the product level economics. If you're taking on a split pay product with 5 to 5.5% merchant fees, you're not going to be making 4 points of margin. And so you do expect a little bit of compression on a percentage of GMV basis on the split pay business. And yet the opposite is true on our interest-bearing business, where we're able to earn even higher total revenue less transaction costs, but over time. And I think as we continue to scale some of our enterprise partnerships, you're going to see some, again, back-endedness to the timing of those things. So our guidance reflects the mix that we expect over the next 6 months, and we'll update everybody with 23 back when we talk later this year. But we're not at all concerned with our long-term guidance of staying in the 3 to 4% range, which we believe is still materially better than our competition.
这个讲的是它的那个毛利率啊，就是刚才我们其实大概讲过，就是说它很重要的一个指标，就是大家可能需要回去看一下我讲 Affirm 的原来那几集，我其实讲过这个revenue less transaction cost， 就是收入减去交易成本，这个大致相当于一个毛利的概念。比如说，就是你的收入当中减去，比如说你付给信用卡公司的，减去你的坏账准备啊，减去你的资金成本的，你能剩下多少？所以刚才 CFO 解释说，比如他之前这个是比较高的，曾经到过8%、6%，然后现在过去2个季度在4.1%，就是这个数字。他说是长期来讲的话，由于像刚才讲的，他很多现在转去电商，比如说 Amazon、Shopify 这些比重增加以后，这些电商本身给他的利润率不高，所以这个他长期的指引是这个4会变成3到4之间的任何一个数字。OK， 所以只要在这个数字之间超过3%，大概低于4%，对公司来讲，管理层来讲，就算是达到了目标。
Okay. And I guess more broadly on profitability, can you kind of give us your updated view on the sort of longer-term, multi-year path to profitability? Has ramping up any of these larger, significantly larger partners like the Amazons of the world, maybe faster than expected, the ramp down of Peloton, has there been any change to your view or approach or ability to kind of solve for profitability at the same pace over the longer term?
No, I mean, Max's line in the setup today is one I'd like to reiterate, which is our strategy hasn't changed. We talked about the financial model and framework in September, and that remains true no matter the macro conditions changing. While we have the opportunity to grow at this pace with what we think are industry-leading unit economics, we're not going to take our foot off the gas, and we're going to keep scaling up the network. And the path towards profitability, the long-term financial profile of the business remains the same, and it is a function of us achieving scale greater than where we're adding human capital. That human capital is what's driving all of these, we think, fantastic results, and we're still well prepared to keep investing into what we think is an incredible growth opportunity.
Great. I appreciate it. Thanks so much.
Just one more way of thinking about it that I guess I utilize. Fundamentally, just from going back to my experience 20 odd years ago, pricing power of a payments network is directly proportionate to the number of active users it has. Full stop. Like ultimately, when you come to market and say, I have a product and I would like you to buy my way of delivering tender, the price that product is able to command is inevitably a function of how many people are using that product, prefer it, would like to use that at checkout, whatever way you want to call it. And so the reason we are so consumer growth and coverage obsessed isn't for some sort of a vanity number, but the fact that ultimately we intend to come to market and say, we are the largest network, we are the most active network, we would like you to pay for that appropriately. And so the growth is a direct tie to the path to profitability.
这个就是刚才这句话，其实理解这家公司最核心的一句话，就是说增长是实现利润的最重要的一条路。就是说为什么呢？就是说他原先是 PayPal 的创始人之一 ，Max， 就他讲说，在他的理解之内，你如果做一个支付的行业，你最终你能拿到利润率多少，取决于你的用户有多少。就是你如果用户够多，有了这个规模，你就可以去你的商户那里讲说，比如他现在用户只有1100万，对吧？到现在，如果几年以后变成10倍，比如美国有1/3的消费者，有1亿人在他的平台上用他的信用卡，那个 debit card， 那个不知道怎么叫借记加卡，对吧？就是也有信用费，也有信用功能的借记卡，然后用他这张卡来消费，在他的平台上去做先买后付或者别的服务，那 Affirm 就可以去任何一个商户说，我有最大的网络，我这里面有1亿个用户，我可以去你这里，去你店里消费，也可以去你的对手那里消费。所以你要想要我的生意，你要给我多付钱 ，OK？ 所以他讲的这个意思，就是说更大的规模、更大的话语权，就可以带来更大的 take rate， 就更多的利润率，然后就可以马上实现盈利。所以在他看来，他这样的公司就是增长越快，规模越大，将来的就单位的效益的利润率会越高，就越容易实现盈利。所以这是跟一般公司不太一样的。
I see. Great. So not too much has changed since your prior view, despite how the business has evolved. I appreciate it. Thanks for your answers.
Our next question comes from the line of Dan Perlin with RBC Capital Markets. Please proceed with your question.
Thanks, and good evening, guys. I wanted to ask a question around the kind of frequency of repeat customers versus the first-time users. You have a slide on that a little bit. And the question is really, the interplay there between your customer acquisition model and how we should be thinking about, that influencing cost into the second half of the year and maybe even, into next year.
Yeah, so
I am figuring out. Go.
I'll start, and then Max can add on. I think we included that slide in the supplement because we're really proud of what's going on underneath the surface. So we have a step change in the number of users, 150% growth. And increasing frequency when you have that much user growth is actually really challenging. And if you look at that chart and look at just the total transactions from repeat users and the growth there alongside the net new user growth, it is which I feel like a really good spot for the business. There is some impact with respect to the rate of new user growth on unit economics. First time use tends to be slightly less profitable than the lifetime value of the consumer. And so you do have a little bit of startup costs associated with that user growth. But as Max mentioned before, long term, that's much more important to us. So we're going to keep adding users at a very aggressive clip. We're going to stay focused on that. And part of the reason we have so much confidence in the long-term economics is that's happening right alongside tremendous growth in repeat usage on the platform. And we talk about network effects in the business. That's what that means. And in the long run, it gives us all the confidence in the world around where the economics will ultimately be.
Yeah. No, I thought that was a pretty impressive set of numbers as you think about growing the network that quickly, to have that level of frequency so quickly. So the other question I have, do you have any insight that you could share with us around kind of January trends, in particular around the health of maybe some of the lower income cohorts that might be coming into the portfolio? I know some players out there have some concerns around what that dynamic is looking like. So if you could share any of those, that would be great. Thank you.
Yeah, I think what you saw in the disclosure around the delinquency trend is similar to how I think you should think about it, which is, to date, our credit outcomes are still a function of the decisions we've taken with respect to approval rates. There's obviously any number of seasonal effects that do require taking a fine-tooth comb over, but not seeing the broader weakness that others have seen in our overall credit performance, and feel really good about where we're at, and that's what gives us, again, the confidence to give the guide that we have for this quarter.
Great, thank you.
Our next question comes from the line of Jason Kupferberg with Bank of America. Please proceed with your question.
Hey, thanks, guys. So I just wanted to come back to this kind of general topic of, we're adding $1.5 billion of GMV to the full year guide, but we're basically not changing revenue less transaction expense. I know you're talking about the interest-bearing loans and kind of the revenue recognition dynamics there. I mean, how long is that lag typically? I mean, I think this is a dynamic that's kind of throwing people off a bit, and how much of this sort of dynamic is due to Amazon?
Yeah, so the Amazon's part of it, but while the growth rate in Amazon, while the addition of Amazon is great for us, as we communicated, we still double GMV excluding Amazon, and so we know there's a lot of growth happening across the whole portfolio. So it's not just limited to Amazon, but the interest-bearing portfolio is growing quite quickly, and that does tend to have that effect that you talked about. The other obvious impact with respect to the revenue less transaction cost as a percentage of GMV is the mix towards split pay, again, as it does run lower. And again, it's a repeated theme with us, but product mix really does shake out with respect to the take rates on both revenue and the revenue less transaction costs. And again, I think the only other thing to repeat is we feel like we're operating at the higher end of the range that we've given folks in that 3 to 4% range, and have a lot of confidence, again, in our long-term unit economics here, and again, would put ourselves up against anybody in our space with respect to the rates at which we're delivering here.
Okay. And then I guess just for the back half of the year, how should we be thinking about GMV growth excluding Peloton? Like has your full year expectation on Peloton changed at all, just given some of the challenges that they're having?
Yeah, our current guidance reflects all of our current thinking on where they're at. We had, frankly, a good quarter in Q2, above our internal expectations, and feel like they're still delivering an incredible amount of volume for us. And we admire their brand, and we admire the loyalty that they have amongst their consumers, and we'll keep partnering with them. We launched with them in Australia this past quarter, and we're going to keep helping them grow their business.
Okay, thank you.
Our next question comes from the line of Andrew Jeffrey with Truist Securities. Please proceed with your question.
Hi, guys. Appreciate you taking the question. Maybe as it relates to Shopify, I'm still trying to sort of reconcile James's question a little bit too. I think you said it'll be 15 to 20% split pay. It will be about 15 to 20% of GMV this year. I guess the first question would be, where do you think that can go? It's a pretty quick ramp, although not totally out of line with our expectations. And then the follow-up would be, it kind of implies, based on your guidance, that the rest of the business is growing about 45% volume-wise, which might be a little bit lower than we might have thought. Can you just address those 2 points?
I'll start and I'll let Michael finish. And so, I don't think we'll break out exactly what percentage of Shopify split pay installments is, but it's obviously grown really well. The merchant adoption has been excellent, and yet there's no shortage of demand. So I'm confident it can go up more. I don't think we're breaking that out in our guidance, or Michael can correct me if I'm wrong here. But there's an enormous amount of road there. Just if you take a quick look at Shop Pay, shopping installments doesn't even support interest-bearing loans today. That alone as a headline should give you a pretty good idea that the service has been scratched, but not a whole lot more.
Yeah, and so 15 to 20 is a good number. How big could it be? It could be very big. Just like we haven't launched interest-bearing on Shopify, we haven't launched split pay with either of our 2 largest enterprise merchants. So I have a lot of confidence that that number can continue to go up. I think the only other point with respect to the rest of the portfolio growth is just, we are up against continued elevated levels in our, call it a long-term zero finance business, and we would continue to expect some of that to be a drag on the balance of the portfolio, but not something that we're trying to, again, target a Q3 growth number. We're thinking about how this network scales and then how that those network effects show up with repeat usage across the whole portfolio.
Okay. All right. Well, I appreciate it. Thank you.
Our next question comes from the line of Andrew Botch with SMBC Nikko Securities America. Please proceed with your question.
Hey guys, I wanted to ask a question about the CFPB look at buy now, pay later. And from whatever you can share, is there anything you've garnered from those initial discussions that kind of give us a sense of how they're looking at the offering going forward?
Sure. First of all, it's obviously not for us to comment on their work there. The thing that's been true for us for the last 10 years is that we have a very, very high moral ground approach to this entire business, to the way we conduct ourselves, to the way we treat consumers, the way we deal with disputes, et cetera, et cetera. And so, all things kept equal, we've been at the forefront of the industry suggesting to the regulators that they should have a look and a set of clear rules and just a good guidance around the conduct of all the players. And so in that sense, it's a positive news. That said, the regulatory relationship is both a very, very important thing, a very serious thing. We're interacting with them. There's a fairly detailed request for information. Obviously, we'll reply to that. But all things kept equal, I think regulatory attention to the space is great. I was a little bit glib when I pointed out that in a public record of the information demand, there was quite a lot of space dedicated to asking for the information around fees charged, be it late fees or deferred interest or all sorts of other things. And we filled that out with zeros because we don't charge any of those things to consumers. It took a small amount of pride in that we stuck to our mission and stuck to our approach to treating consumers right. That said, I'm confident over time there will be more regulatory attention and we will comply with all the necessary rules and we'll do well there. So too early to tell what the future looks like. It's certainly for them to determine, but we're very happy to engage.
所以这个是讲到监管的问题。我们在讲他年报的时候，其实说过，我不觉得这家公司有多大的监管方面的风险，因为它主要的是它的主要产品啊，像现在它给客户提供的先买后付产品，没有迟付的罚金也不利滚利累积利息，所以从它的角度，比它需要替代的这种原先的信用卡产品，对消费者来讲当然要方便，而且透明，而且更诚实所以从这个角度，刚才 CEO 也是同样的，几乎是同样的言论，就是说他觉得现在有监管层开始介入看这个行业大家怎么操作，开始出台法规，他觉得是好事。因为同样都是先买后付的产品，但其他的他的一些对手可能会收，比如说你如果付迟了，可能会有罚金的，或者是会有别的问题。对他们来讲这方面风险应该是没有。
Okay, thank you. My follow-up would be, is there any kind of guideposts that you can kind of give us from a macro perspective, what you're embedding in the outlook for be it unemployment, inflation, and rates? And I appreciate the color on the interest rate moves to the impact of the model, but just kind of thinking about what a baseline number that you're embedding in your assumption would be.
Yeah. So again, but
sorry, I'll this time I get to take the victory lap. The last one was yours, but so, and I'm sure you'll have macro views as well. But just the thing that I think people really misunderstand about our product, maybe because it is more popular outside of high finance, perhaps. When the interest rates go up, when the prices go up, really, when prices go up, a product is more useful. If you're trying to make ends meet and you're trying to pay for a couch and your credit card is confusing you and the rates just went up and Affirm gives you clarity and way to pay for things and a clear schedule, and then you're done and there are no late fees. And half the time, plus or minus, the seller will sponsor it and you pay no interest. Just here's a basic thought experiment. If the card rate that you paid went up 5%, for example, how do you feel about the 0% rate that a seller at a homeware shop is offering you, powered by Affirm? Like, it's 5% more compelling. And so as inflation happens, the product that we provide is actually more powerful, more useful, has significantly better bearings on the sort of consumer demand side of things. On the flip side, of course, the government addresses inflation, raises rates, etc. I'll stop now and Michael can tell you what we've done about it, but all things kept equal at that top line, this is generally a tailwind, not a headwind.
Got it. I appreciate that, guys.
Yeah, just
Michael.
for the total avoidance of doubt, all of our outlook reflects the forward curve. And so there's roughly 180 basis points of rate increases. We take that into all of our models when we give guidance. It's consistent with the market expectation of rate movement. And so we talk about rising rates. That's not a problem for us at all. That's already reflected in the guidance.
这个就是我刚才讲的，就是很多人对，我看大家留言区的很多问题也都在持续的问利率利率其实对一个公司影响不大的。就刚才他 CFO 之前讲过了，利率如果对它的成本影响是多少，它都有量化，同时也讲说它有别的方法可以把这些可以抵消掉，至少抵消一部分。CEO 刚才讲的是另外一个方面，就是说利率如果上升，你买一个东西，比如你原先要用信用卡，你的由于利率上升了，或者是 inflation 通货膨胀，这个那个成本就增加了。你现在有Affirm 这么一个产品，可以没有利率的，就是无息的给你买，可以让你分期付款。那这个产品对你现在应该是更有吸引力了，所以从商户的角度就更愿意 offer 就提供这样的产品。所以他讲的意思是说，利率的影响对公司是说对收入是正面的影响，对成本会有一定的负面影响。
Appreciate the color.
Our next question comes from the line of Brian Keane with Deutsche Bank. Please proceed with your question.
Hi, guys. Thanks for taking the questions. Just two clarifications, I guess, just because it's come up a few times. But the implied revenue transaction cost take rate, when you gave guidance for Q2, was almost about 5%. And so I think one of the surprises was it came in at 4.1. And you talked about mix. So is that just that you didn't realize that the shop pay business was going to grow that much and it had that much of a factor on it? Just trying to make sure that the guidance versus the actual.
Yeah, that's right. The mix impact of the business, the growth that we saw, which was obviously well in excess of the guidance that we had given in the quarter, tended to mix towards either lower revenue less transaction costs take rates as a percentage of the total, or tend to be a little bit more back-end weighted. And both those two effects caused the percent to go down, despite the fact that we did, of course, beat the guidance on a dollar basis.
Got it. And then the follow-up question we get often is the profitability on those larger contracts like an Amazon or Shop Pay. You know, how do we think about that? Because those obviously those terms are, you know, with some larger merchants, you know, typically in merchant acquiring, the larger merchants push pricing the hardest. And so, you know, it's really all pricing is made on SMB. So just trying to think about that relationship. Thanks so much.
Yeah, if you look at the merchant take rate slide again in the supplement, you'll see that we're doing quite well on the split pay business with respect to our ability to continue to earn good fees. We're not breaking out profitability by partner, but I think a key part of the reason we were able to deliver these exceptional enterprise experiences to the largest merchants is the fact that we're not just reliant on merchant fees. The fact that we do have consumer interest in the economic model does allow us to get to the merchant fee clearing rates that work for largest enterprises while still delivering really strong unit economics.
Got it. Thanks for the clarification.
Our next question comes from the line of Dan Dodd with Mizuho. Please proceed with your question.
Hey, thank you for taking my question. I just have a question regarding kind of where you are in terms of GMV and what's implied in the guidance. I'm still trying to get my head around, you know, the massive beat in the quarter, and then you seem to be guiding kind of, you know, in terms of a sequential basis, a much lower GMV. I just want to make sure that this is hopefully a sign of conservatism, and that there's the question we're getting a lot from investors this evening is that there's, you know, maybe something else that got weaker. So we just want to reassure ourselves and investors that this is simply being conservative given the strong results. And thank you very much for this.
First of all, I think Michael already mentioned this. Seasonality is a significant component of this business, and so that's an important piece of the puzzle. I'm not sure exactly what you're asking about in terms of something that may have gotten weaker, not from our point of view. I think we've done fine and not anticipating weakness. But we try to make sure that we promise and deliver as opposed to promise and hold our breath and see what happens. That's probably a philosophical approach to guidance that we're out there.
Got it. Yeah, sorry, I didn't mean to sort of harp on it. If I look at sort of pre-COVID kind of trends on a GMV basis, it doesn't look like, at least like, you know, Q3, Q4 weaker. That's why I asked the question. But, you know,
in kind of all honesty, the quarter we just exited just an absolutely monster. So, you know, no matter what you sort of say for the next one, it'll look like, well, you know, gosh, what happened here? But our transaction volume, I'm going from memory here, so I may be wrong, Michael, correct me, but I think we tripled year on year our Black Friday Cyber Monday transaction count. That should, we haven't tripled any metric of that class since we were a Series B or Series C company. So the growth of GMV and transactions accelerated quite a lot. We'll digest it and grow some more.
Appreciate it. Thank you so much, guys. Appreciate it.
next question comes from the line of Vincent Caintic with Stephens. Please proceed with your question.
Hey, thanks for taking my question. And thanks for all the details on the credit trends, all the slides there. Just wanted to follow up on that. I guess there's this concern about credit normalization and how it impacts the business, if at all. And so, looking at the slides, the delinquencies, still below 2019, but getting there, the net charge-off as well. Just wondering, as you're thinking, if credit is normalizing, how does that impact the business? And if you can describe some of the offsets that you were mentioned earlier, like the optimization, the merchant pricing, and so on, that would be helpful. Thank you.
这种问题你就可以给大家一个印象，就感觉说华尔街的分析师很多水平其实很有限啊。比如说，其实你看公司之前财报季报，刚才 CFO、CEO 也一直都在讲说，他坏账是他们的选择，而不是他们被迫接受的结果。你看分析师最后问的问题，仍然还是问同样的，就是显得对公司缺少基本的理解。
I'll start and let Michael chime in as well. So I'll never tire of repeating it, but we choose the delinquency number we post. Modulo commentating or if it's a completely unexpected event, our job / goal / approach is to drive to a number that we like here. And we feel that we were probably retrospectively unnecessarily careful or unnecessarily tight, for lack of a better term. And then so we loosened quite deliberately. And as you noted, we've also, or someone else actually noticed that we have now gotten to roughly the range that we like, and we'll continue managing the number. And so in that sense, there are inevitably ups and downs in consumer behavior and sort of stimulus winding up and all the other versions of microeconomic events impacting the business. But we have an enormous number of transactions that sort of, think of it as a curve that's differentiable at every point, basically, I'm not sure it's not an infinite number of derivatives, but it's a high number of derivatives in terms of ability to differentiate, which means that at any given time we have control both at product level and at the consumer level. And also not being a line of credit allows us to differentiate a specific point of purchase, specific type of transaction. And so we'll continue driving to the outcomes that we want for our margin and our numbers. And the macroeconomic realities, or at least our read of it, is what shapes our willingness to sort of bet into the gray zone. And as we read the macroeconomic numbers, we'll become less and more willing to allow a little bit more risk into the system. But it's something that is a choice. In that sense, it's hard for me to react to what is the macroeconomic or what is the wider consumer trend doing. There's a lot more demand for our product than we are approving. In many cases, because it's just a bad idea for a particular consumer to borrow, certainly borrow from us given our lots of guardrails, no late fees, etc. So in that sense, the demand for our product significantly outstrips our willingness to take the risk, and we'll continue managing sort of the right balance there.
Okay, great, thank you. I guess following up on that, you have credit, the credit variables as a input of your decision making. I guess if there is a kind of a macro credit issue, that it doesn't sound like that's really going to impact volumes or merchant pricing, that should stay the same because your product becomes more valuable in that situation. Or maybe you could talk about, I don't know, like the inputs and outputs there.
So I'll tell you a little bit of a color generating anecdote. In the earliest days of the pandemic, we actually went to our merchants and said, look, we believe the macroeconomic conditions are going to worsen before they get better. We don't really know. There's a lot of uncertainty. For those of you who are very focused on a bottom line, we are going to adjust credits, which means that approvals will go down a little bit. We're dealing on a margin here, so this is points up or down. But for those focused on the top line, and it all depends on the margin embedded in the merchant's product, right? And some people manufacture their own, others resell something, they buy it and resell it again. But the margin content that they have is usable to increase our approvals and allow us to bet in the consumer ability to repay sort of gray zone where the models say our ability is 5, but it's not 100%. And we, generally speaking, were able to command a significant price increases at the merchant base during the early days of the pandemic, because the products that we provide to the consumer in the moments of uncertainty is just so damn powerful. And so, yes, generally speaking, I mean, there's lots of sort of asterisks to add there, and macroeconomic issues can be described as all kinds of things. But as the economy ebbs and flows, if consumers need more access to credit, many of our partners are very happy to pay more for that consumers to complete transactions, because the certainty and sense of control that we provide is what helps them move merchandise off the shelves. And so in that sense, it's a little glib, but macroeconomic uncertainty is actually a driver of businesses like ours. If everybody was just swimming in government stimulus money, maybe just buy everything for cash. And so the discontinuation of various stimuli is on net a positive driver for the business, both on the consumer demand side and the merchant's willingness to pay for our services.
Okay, perfect. That's a very helpful commentary. Thank you.
Our next question comes from the line of Chris Brendler with D.A. Davidson. Please proceed with your question.
Hi, thanks. Good afternoon, and thanks for my questions. I'll start something a little bit more boring on the expense side. Pretty big sequential increases in all the non-GAAP expenses, technology, sales and marketing. I just want to get a sense, is that related to some of the ramp up in some of these partnerships, or should we think of that expense growth as a run rate? And obviously, I know you have the operating income guidance out there for the near term, but just thinking about should expense growth slow, and maybe giving a characteristic of some of that expense growth would be great as well. Thanks.
Yeah, characteristic is mostly human capital combined with marketing investments on the non-GAAP side. On the GAAP side, there's also the impact associated with stock-based compensation, D&A, and the other non-cash items. I think we will stand by our long-term guidance that we gave in September around the profitability of the business being a function of the growth rate. So while we're growing like this, we are going to keep investing in that human capital to build great products and delight consumers. And when and if that growth rate ever starts to slow down, you'll see us grow expenses much slower and begin to deliver positive adjusted operating income. I think, of the profitability or bottom line measures that we really manage to, that adjusted operating income number is what we intend to hit. It's where we have the guidance out for you for this period, and that's the number that we think will become scaling up and down as growth rates change.
Okay, thank you. And I guess another boring question, Michael, is just the health of the debt markets. I know you continue to use securitization both on and off balance sheet. It looks like you sold some more whole loans this quarter. Balance sheet growth actually came in a little bit below our estimates. Is it still as healthy as it was given your increasing traction among fixed income investors, or has there been a bit of a pullback given the macro conditions?
No, I think we still continue to have very well received deals in the market, both single counterparty deals and our forward flow relationships. As mentioned on the script, we added a great deal of capacity by adding new partners and upsizing existing ones, and we still continue to receive a lot of demand for the assets. And our securitization activity has also been very successful, and you're going to see us continue to be very, very active there in both of those two markets and levers to continue to grow our business and deliver, we think, again, excellent capital efficiency.
Great. Congrats on the results as well. Thank you so much.
OK， 这个就结束了。所以他最后就是整个的这个电话会议当中，让我唯一一个比较吃惊的就是他的对后面2个季度以及全年的费用的指引超过我的预料。所以我后来看了一下提供的资料，就大概能知道怎么回事。比如说大家看他的，这是他的那个整个 slides 的第31页，他讲到那个对损益表的对照，他就讲说哪些是 gap， 哪些是 non gap， 就是这里面费用进行分类。大家如果看真正比较大的项目当中，比如说这些当中，其实我比较留心的，因为它最后比较长， 比较大的项目反而是这个股票薪酬，就是这一项。股票薪酬我之前讲过，就说一个公司如果上市以后，前面几个季度会有大量的股票薪酬费用，因为之前的给员工的他解冻了可以卖了，所以对公司要算作费用。就是比如说他是去年一季度上市，对不对？所以一季度有179个 million， 1亿8000万，后面变成1个亿9千万，8800万，对吧？所以这个是在不断的减少的，后面应该是越来越少，所以这是正常的，就是说给员工的股票薪酬作为这个绝对数会逐渐减少，而且相比这个销售的比例会大量的减少，这是正常的。但这家公司就是为什么它的利润率这么差？我现在发现它另外一个问题就是，它跟别人不同的就是它还给了它的那些伙伴，比如说我们之前讲过的 Shopify、亚马逊，我估计还有沃尔玛这些，给了他们很多期权 warrant， 就认股权，可以让他们在适当的时间达到了一定目标之后，然后可以拿到流通股，然后就是如果这些同样也变现之后，就是也解冻之后，比如说Shopify 那部分，那些如果达到了指标，他已经拿到这个权利，然后这公司Affirm 就被迫也要计入费用。其实这部分其实很高的，你看在之前去年的时候都比较低，都是1000多万、1600万、1700万，然后这个季度一下增加到8700万，跟你给员工的股票薪酬基本一样了。但问题是，员工的股票薪酬后面会越来越减低的，而这块是现在看起来在未来几年可能还要保持在一个比较高的水平，因为他们发了很多类似的认股权，所以我相信你看这两项加起来就将近1亿7000万，对不对？所以你看它的总共的亏损只有1亿9000万，所以主要的项目就在这里。就是为什么说我之前估计它本来应该离盈利不远，但现在发现它后面2个季度至少现在看起来离会计盈利还有比较大的距离。我相信就在于这个，就是它跟别的公司不同，还发行了对它那些伙伴为了拿到它那些网站的那些平台，然后给出了比较费用昂贵的认股权。OK， 所以这是它就是管理层没有讲得很清楚的一点。其他的我觉得整个的财报、年报、管理层的质量，公司的基本面，我觉得没有什么太大变化。然后从公司角度来讲，我们之前讲它年报其实提过了，对不对？这家公司要看什么？它的年报里说，管理层看3个数字，对不对 ？KPI， 一个是商户的数量，对吧？这是个商户的收入数。第2个是用户的数字，第3个是用户的购买的频率，对不对？所以它第一步要做的不是盈利，而是规模。像我在讲这个问题，它先要做规模，然后有了规模，它才能有话语权，然后把这个双边市场建起来，然后才能有了话语权，才能要求更高的商户对它付款 ，OK， 给它更高的利润，它最后才能盈利。所以它的这个路线是相对比较清楚。所以最近几个季度，它首先要拿的是更多的商户和更多的用户。所以它未来几个季度的发展，主要看亚马逊的合作怎么样。第2个就它新发行那张借记卡、借记加卡，对消费者来讲，大家反应怎么样？如果这个反应很好，一下消费者再增加很多的话，这家公司前景还是不错。OK， 所以我对不起，已经讲了1个半小时了，我看一下大家的问题。OK， 从最上面开始说 ，OK， 我会讲的比较快一点。Vanguard 持有 Open 到5%的股票，对这些我们讲过的，说这个熊市过去之后，然后你看那些增持的都是机构，他们好像也增持了 Upstart， 但没有具体看。看完财报之后会想买吗？这个我其实之前视频在会员区已经讲过了，我就是讲那个熊市如果来的时候，我考虑的哪几家公司。但至于哪家公司会买不买，最终不是取决于这一个公司，而是取决于我现有的，比如说Upstart、Open Door， 然后西方石油，跟我在看的那几家其他的公司，他们相对的，我对他们基本面的理解，以及他当时股票的价位相对的比较，对不对？比如说 Upstart 如果还在跌，别的公司也在跌，我可能还是会选择加仓的 Upstart， 因为我对它最好。但如果 Upstart 我不知道，我今天还没有看因为一直在做直播。如果 Upstart 最近几天涨了很多， 但其他的公司反而跌了很多，那这个它的相对的比就会变化，对吧？就是说，其实最终就所有的东西都是一个 trade off， 所有东西都是一个抉择，你买了这个就不能买那个，所以要看相互的变化。为什么亏损这么高？我刚才解释了，希望长期有能力嘛，当然有能力，就是但是现在看起来可能到明年。Revenue less transaction 指的是什么？这个建议大家回去看一下我之前讲的 IPO 的视频，我刚才提到了，它就是收入减去直接的成本 ，OK， 就相当于是个毛利的概念。直接成本里面就包括融资费用、坏账计提，以及它支付给那个支付网络的费用。KPLT 它跟 Affirm 差很多，因为我觉得除了 Affirm 但 Afterpay 现在变成了 Square 的一部分，我觉得其他的家，你如果只做先买后付，我觉得这个其实跑道不长。就是我要看的公司是要有很大的理想，它要整个要代替 Visa、Master， 要建立自己的支付网络，建立双边市场，把整个的电商包围的这么一个生态闭环的生态圈，我觉得才会考虑。会不会考虑？这个我之前讲过了，会考虑KPLT 好像也是先买后付，听完还是认为 Affirm 是最好的 Buy Now Pay Later， 我是同意的。所以马斯克每次都翻白眼，是的，就是做 CEO 啊，你要知道你要应付的很多人，其中一部分就是这些分析师啊，分析师有好有坏，有些人还故意挑你刺儿，还故意当刺儿头，然后让你难看。对马斯克前面几年，因为他受的白眼比较多，所以他这种反应我也可以理解。听起来真的不差，这我同意。就是说，它的股价跳水我觉得很多方面还是在于像上次 Upstart 一样，大家对它期望太高，可能没有想到说这个季度由于是比如说亚马逊这些电商的这种假期的就旺季，把销售收入推得很高，但后面到了一季度这东西双刃剑，这个高了，下个季度也就相应变低了。所以问题是就是还是大家期望的问题。这是拼多多是吗？不知道中国的股票没有了解。知道给员工 West 是一次，员工 West 就是说它指的是说给员工的期权是不是一次性的？但是这是这样的说，员工的期权很多是上市时候就会解套 West， 但问题是员工加入的时间也不一样，有些还有时间的限制，所以它有一部分可能是在上市之后才会解冻，所以这个很难完全一刀切。但总体来讲，就是那个创始团队一开始那批人，多数情况下他们是一旦上市，就是很多就开始卖了，所以呢，费用为什么会集中在前面几个季度，就是这样的。给伙伴的期权，就这个问题问说，给伙伴的，比如说 Shopify、亚马逊的期权是不是也是一次性的？不是的，这我们之前讲过的，就是给单独提过亚马逊的 Shopify 一样，好像至少亚马逊非常清楚，它有很多的条件，说比如说达到什么样的条件，甚至股票怎么样，亚马逊才能拿到不同的金额。比如说，如果这家公司股票本身5年之内不涨，那亚马逊那个认股权估计拿不到多少。如果它涨得多，亚马逊就能拿得多。所以你去看它我原来做的视频有讲过，它是分那个不同层级的。OK， 我今天在看 operating expense revenue 上，就是说问它的收入是不是得益于市场费用的大笔投入。从 Affirm 这边好像看不到规模效应，是怎么理解？我的理解是，就这个，这个是这样，就是说每个公司在市场费用上投入其实是不同的。为什么呢？因为每个公司，比如说你是对消费者你的像比如特斯拉它几乎它没有市场费用嘛，因为大家这个名字，马斯克一个人就是行走的市场部，行走的公关部，对不对？他不需要做任何市场费用。但是很多公司呢，可能需要做的就比较多。Affirm 这种呢，因为它也要对消费者做，也要对商户做，所以它有可能它的市场费用花费比 Open Door 可能要多一些。因为 Open Door 毕竟只是对用户嘛，它没有这个商户的概念，对不对？然后而且 Open Door 它本身产品就更有革命性，对吧？就是你比原来的这些一眼就可以看清楚它的区别有多大，所以它的 产品就更有那种病毒传销的效果，对吧？比如大家口口相传，比如我通过 Open 到买房或卖房，我会告诉我的亲戚朋友周围的人，大家可能就都知道了。Affirm 可能相对的来讲这方面会差一些，但它不见得没有规模化效应。比如说为什么呢？因为比如说我刚才讲了，你如果把股票薪酬拿掉之后，它其实现在离实现营业利润已经比较接近了，所以意味着说它还是有规模效应的。但它另外一个方面就是说它管理层刚才也讲了，他会招很多人要做未来很多产品的研发，这个呢对短期会有影响。我在 Upstart 也是那么讲的，说 Upstart 为什么上个季度那费用，大家有人也在抱怨说为什么费用高，是因为他要做未来的好几个产品，他必须要招大量的人，是吧？做很多市场的东西。这个压力也是一样，他现在要招这么多人是坏事，因为它会把费用提高，但也是好事，意味着说它这个先买后付。我一直讲它是一个切入点，它不是它最终的产品，它未来要做的是收集到通过这个之后，用大数据收集很多商户的信息之后，然后帮商户每家商户就是 customize， 反正就是每家商户给他制定特别的战略，说你要怎么销售，你是要怎么打你的市场费用，怎么针对我现在我的用户的，比如将来有1个亿用户，你要看哪些用户用什么样的方法，给他折扣还是给他别的方法来，他以后很多产品是针对每个商户要做细分的，所以他将来的产品线应该还很长，这是我的理解。所以这个短期确实当然是痛苦了，因为它的费用会比较高，但长期还是主要看收入的增长。这个可转债资金嘛，这个就是这样，就是因为它就这个可转债资金跟它的什么 warehouse 那个 ABS， 就是所有市场的那种不同的 funding 的这个就是不同的资金来源，它是放在一起考虑，就哪种它在什么情况下拿到的成本比较低，它可能就会去考虑。比如说为什么之前很多公司，包括 Upstart 也是一样的，都几乎在同一时间，Open 到也是一样，在资本市场拿了很多可转债，就是因为那个时间这可转债因为是零利率嘛，非常非常便宜，所以你最差的结果就是把股票稀释一部分，但你可以在很低的利率下拿到很大一笔钱，可以一下用好几年，所以很多公司会做这个。OK， 这个说问我是不是以后直播在最后总结一下，在平时后半段可以听在重听的时候可以听后半段的总结，这个可以我一会儿可以做一下。其实我刚才已经讲了，但我最后如果回答完之后，我可能用几分钟再重点总结一下这家公司的财报的内容和电话会议的内容。OK。这种方式会比较长，因为我希望这家公司大家就通过年报，然后之前我视频的讲解，通过听电话会议，然后这样有一个比较清楚的了解，知道它的公司是怎么样的。比如说，如果我用简单的话来总结一下这次电话会议，我就说从正面来看，说公司的基本面没有变，是吧？因为它公司强调的，它现在阶段强调的是。他的公司要做的是两边市场，一边是消费者，一边是商户，所以他现在公司要做的是把这两个市场要做大，所以他公司管理层主要衡量的是消费者增长多少，商户数增长多少，所以这两个数目然后都没有问题，而且商户的收入增长也很快，所以这是他最关键的。OK， 这是比较好的一方面。然后收入呢，这个季度增长非常快，由于是因为是很多电商，然后是holiday 因为是假期的原因，但现在它主要的问题就是谈到比较负面的地方，就是说大家对它指引不满意，他们觉得说现在指引是说，你下个季度为什么下降那么多，就增长不像原来那么快了。但管理层解释了，因为它现在这个季节性的影响，由于是电商，所以一季度淡季，所以这个指引可以理解。另外一部分，很多人抱怨说它的费用支出比较高，像刚才我解释了，费用高是两个原因，一个方面是说它的投入仍然很高，招了很多人；第二个方面就像我刚才讲的，它虽然给员工的股票薪酬在下降，但它给那些伙伴之前给的认股权，现在逐步的也开始 解冻了，开始要变成费用也加进来，所以这两个相加占了很大的一个比重，所以这后面这一部分认股权这部分是别的公司没有的，所以这是为什么说它这部分确实让我很吃惊，为什么整个今年的利润率比我原先想的要差。所以总体我觉得这家公司啊，你如果看它长期的，它其实还可以做很多别的产品，因为它做的是对消费者，它要变成取代你的消费者现在钱包里的 Visa 和 Master 信用卡，将来用它的那张 debit card 啊，用它那张借记卡里面也可以做信用，也可以做贷款啊，用这张卡就可以做所有的支付，然后这是对消费者啊，然后再加上别的所有的服务，比如你能想到的 SoFi 能做的 Square 能做的，我相信他可能都会做啊。另外一方面就是对商户来讲，就是 Affirm 将来有可能变成这个商户的最好的市场渠道啊，因为它有自己的，比如将来有1个亿的用户，可以直接带到商户里面去，而且它有商户所有每个交易的那些具体信息，它可以结合商户跟他自己的用户的内容，然后可以给商户很具体的建议，说，哎，你的产品是不是有比较好的盈利？你可以做折扣，还是要做别的活动，然后吸引我这里面哪些样的客户，对不对？所以这是他要做的这个双面市场。如果超过这个之后，他还要做的就是完整的一个取代Visa 和 Master 的那个信用卡的支付网络。这个我在 Square 那集重点讲过了，就是他要 Square 跟他都一样，都要变成另外一家专门的闭环的支付网络，就是所有的以后的交易，如果你是我的就是那个 debit card 的用户 right， 你也是我的商户，那你们2个人交易，所有都通过我跟你建的网络，那中间不用付 Visa 和 Master 1分钱，然后完全可以避开现有的网络。那这样的话，这中间的所有的交换费都由 Affirm 来收集。所以就是这家公司如果要投资，就你需要一定的想象力，你要能想到它未来能做到什么程度。就我刚才讲的这些，可能需要未来好几年才能实现。那你对管理层、对 Max 这些团队有没有信心？他可以真的把这些做出来，而且面对将来 Square 或者别的公司的竞争，他能不能一直领先？至少现在看起来他有优势。因为比如说像之前讲的，像 Affirm 他拿到了几大电商平台的，几乎所有大的电商平台都是他的客户，这个不是光你打折就可以拿到的，对不对？证明他确实有优势，所以我觉得还是很有可能，对吧？但是就说为什么说这种公司在早期投资就得相信他的管理层，所以你如果我对比如 Max 这个人没有信心，我绝对不会考虑这样的公司，因为未来这现在就全是靠想象，对吧？就是别人怎么做的东西。比如说我再给大家举一个例子吧，比如说我之前看 Afterpay 因为它也是澳洲的上市公司，澳洲它之所以 Afterpay 最近几年涨那么厉害就是因为 Afterpay 这种形式先买后付，用自己的卡，就是它最近5年大量兴起，有了在澳洲、新西兰有几百万用户，同时澳洲的信用卡发卡数也大概下降了好几百万，所以其实在那样的市场，就是大家已经普遍接受先买后付这种方式来代替的传统的信用卡，所以至少在澳洲是实现了。但是比如说在美国、在欧洲大部分地方能不能实现，这还取决于这个公司能不能把产品做的确实让消费者感到便利，而且能看到实惠。 OK， 这个问说下周的 Upstart 财报是线上直播 ，OK， 我会我可能会提前睡，会6点钟起床，然后做线上直播因为这个比较重要嘛，然后这个会线上直播。我这个问说，我问了旁边是美国的小伙伴，他们都用信用卡，您可能接触的都是比较高端的客户就是他的目标客户，他一切入的点肯定是那些比如说很多人，比如他本身信用卡完全没有问题的，他有很高的支付能力信用卡也给他很多折扣返点这些东西通常来讲的话，他替换的动力就不大。但也有很多人，尤其是年轻人，现在在美国，不管美国了，可能跟别的国家一样，对信用卡公司非常不相信。到时候就是意味着说，年轻人有了一定能力，他又想花钱，自己又没有很多钱，又觉得信用卡将来会让自己 巴拉巴拉弄半天之后，到最后陷入巨额的债务，所以他可能就会考虑别的方式。那 Affirm 像这种先买后付，就首先切入点肯定这是一些就是信用不太好，但是将来有潜力的年轻一代，我觉得这是切入点。但将来能不能变成主流，这是另外一个问题。我觉得变成主流不是不可能，但是会。这个说 Upstart 这个很难预期了。我的感觉，哇，这些有些字我现在不认得了，好像是繁体，就是估计某个公司的财报会是涨或跌，非常非常困难。因为第一个你不知道它具体会怎么样，因为每个公司哪怕你对它很了解，它最终的结果也会一个 range， 它会在一个范围之内，可能好一点差一点，都在正常范围之内。第二个，你不知道像上次一样，你不知道市场对它预期是怎么样的，对吧？哪怕它打破了管理层自己的预期，但市场如果对它预期更高的话，也有可能还有问题。我只是说，按照我现在的理解，管理层靠谱，公司肯定没问题。现在市场预期，如果看它的股价，其实预计并不高，所以我的猜测我不会去赌，但我的猜测大概率，它如果达到超过管理层之前的预期，如果下个季度指引也不错那应该不会像 Affirm 这种情况。对，但这种就短期的猜测是很困难的了。OK， 我们现在做了 ，Oh my God， 2个小时是吗？我都不知道 YouTube 最长时间支持这种直播会支持多长时间。所以谢谢大家参加。如果我回答了大家所有的问题，我们就明天再见。明天我们还有一个直播，我会讲之前几个星期攒下来的问题，然后在后面再回答会员的问题。OK， 所以明天也是同样的时间，然后之后就是等 Upstart 应该是周三对不对？周三早上，周三早上6点钟会直播Upstart 的财报电话会议。OK， 对，但是 Lending Club OK， 它这个本身质量，它跟我现在讲的这些公司不能比。OK， 好吧，那就谢谢大家，大家早点休息。OK， 周末愉快。明天如果有时间的话，明天见。OK， 没有时间没关系，然后看后面再重播也是 OK 的。OK， 谢谢大家，再见。